Futures and options on futures trading involve substantial risk and is not a suitable investment for all types of investors. Past results are not necessarily indicative of future results. When I use the word I in this video, it refers to what I teach in my charting course or what I author in my twice daily oral and written updates. Prices shown on charts and quote boards are in real time and take into account all known activity up to this point in time. And if you'd like to read more of this disclaimer, simply hit the pause key on your video player.
Good weekend, all. Ira Epstein of Linn & Associates with your metals market update, your weekly edition. This is the weekly version because we're on Friday, and that's when I post this, and that's March 9th, 2018. Now, we're just after 2 p.m., so the stock market is still trading away, and as you can see, new all-time highs in the NASDAQ. This market has come running back. Why? Well, let's start with the whole week. You had Gary Cohn resign, President's top economic advisor, over tariffs. The president went ahead and issued tariffs, but instead of doing it across the board, he looked south, he looked north, and said, Mexico and Canada, you have a temporary exemption on those. We've got to put our NAFTA deal together. In other words, he's going to try to wrap it into that. It's a warning shot, but a very important one because of our two main partners. Europe has retaliated. You know, they're screaming what they're going to do. And then the president reminded them, you know, how many of your cars do you send here? We have a 2.5% tariff on those. You have what size tariff? 10% often? China, you have a 25% tariff on our cars. I'm just talking cars. So we're waiting to see the dust settle now because the president has not yet set the guideline for what we'll call an exemption, a carve-out, whatever you want to call that. That will be done within 15 days, and that's right now when the tariffs go into place. So everybody was sort of mum today. I don't think any countries are happy about it, but out of all our major trading partners, the rationale is this, and I'm not saying it's right or wrong. World War II ended. We had to get you on your feet. We got you on your feet, and now it's 70 years later, and we've still got tariffs in place. Why? You go to zero, we'll go to zero. That's basically what he's saying. Interesting thought. I'm not politicizing it. It's just an interesting thought. So what's it have to do with metals? Well, now the question is, the metal market, because we've got North Korea supposedly now wanting to meet with America. We now know that, yes, the market is talking inflation, but did you see today's jobs data? Again, we added another 100,000 jobs that we didn't think we were going to get, but wage inflation still is not there. It is elusive. So the market is thinking that inflation is yet to come, and that's looking favorably on this. You will see that copper got down overnight to 305.5, roared back almost 10 cents. Remember, it's called Dr. Copper. It looks to see how the world economies are doing. When we take a look at a monthly bar chart, I want you to look at this sideways action. This market can break, and if it does, it still has support right here, 1168. I'm more interested in how close the resistance to the market is. And we've got the 100-day average in green. That's the 100-month average. I said it wrong. 100-month at 1347. The upper Bollinger Band on the monthly at 1363.70. You know what? You're $40. That's not much away. If this market tries to break out over that, you will hear a lot of people talk that a long-term base is in place. The market based out at one level here, ratcheted itself up, and kicked that into place back, actually, from 2015 to 2016 to right now when you look at a monthly chart. When I come to a weekly area chart of closes, the market's still in an upthrust. You haven't broken through a previous low. You could. And then supports at 1307.70 on the weekly chart. Okay. But right now you've still gone from 1245.20 to 1353.20, and you haven't taken out a previous low close, which fits in right here at 1307. Gee, it's sort of interesting. Notice where the 18-week moving average of closes is. Both at the same number. When I go to the weekly bar chart, now I'm going to look for the swing line. And right here, what is the trend? Well, the trend is down. You have a pattern of lower highs and lower lows. What ends that trend? getting over 1361.40. So another point of that chart, remember we were looking at the Bollinger Band and the 100-day average. Another part of the resistance. Take out 1303.60, which would be under the 18-week average, and you might add another leg. Here's that weekly chart. Maybe that leg goes to the 1270 level. Maybe it goes to the lower Bollinger Band. Because the Bollinger Band is so far under it, this is what we call the live number, at least what I call it, if you get under 1303.60. But I'm going to repeat. First support's 1307.70. When I take a look at momentum, the momentum is turned down. So I have a confusing chart. You've got the swing line down, but because prices are over the 18-week average of closes, the bias is up and momentum is pointing down. Nothing clean about that. When I go to the ETF, it's identical. You've got the swing line, lower highs, lower lows, down. You're over the 18-week average, bias up, momentum down. Let's go to GDX, the miners. The miners, lower highs, but higher lows. Let me take a look and make sure that's correct with you. 2084, come down to 2094, and we bounced. Okay, the downtrend reestablishes on the weekly chart on any move under 2094. Yes, that would be into the lower Bollinger Band, and I realize that, but that's what would do it. What could turn the market bullish, you heard that word, bullish, is don't take out 2094, take out 2315. Here's what you'd end up with. Higher lows. If you take that out, if you can close over 2268, you got the higher highs and then a close over that, putting this whole area into the resistance. So you always look for the what-ifs. The bears are still winning on that chart. In the silver market, I look at this break low of 1609, and then I come back to the previous low, which was 1613. So we know what we've got. We have a pattern of lower highs so far and lower lows, bearish. Resistance pretty clear here at 1670. That is the 18-week moving average of closes. Take out 1693. You cannot turn bullish on the weekly chart because you'd have a lower low and a higher high, but it could put into play this whole resistance zone. Right now, I think this is where the bears are defending their pattern, and momentum sort of flattened out a bit here. In the copper market, this is the break low that we've had. Lower highs, lower lows. This was what I call an ugly part of a pattern. This is so hard to trade off of there. Look at how wide that whole swing was that week. 304 low, 327 high. The week before, 325 to 302.60. Those are big moves in a week. Now we broke again, and we had no follow-through. So I'm going to say the resistance is the 315 area. Momentum is still pointing down. The bias is down. The trend is down because of the lower highs, lower lows. And the risk is high. Back up to 327.20 to knock you out of that bearish trend. In the platinum market, this whole break went down to the 18-week average, and it found its footing. That's all that you can say. Because you're going to close over the 18-week average, the bias is up. The swing line is clearly down with lower highs, lower lows, and momentum down. Nothing super clean on that chart. In the platinum market, it's the same. Lower highs, lower lows, bearish. A settlement over the 18-week average puts the bias up, the trend down, and momentum down. Two confusing charts. The palladium market is bearish. It's got lower highs. This low this week of 968.85 is just shy of the last break low, but remember, you close lower on the week, so we don't know where it's going to finish off. If it decides to thrust any further, it might make a run to the 952. Where's the resistance? Back up at 1034.75. Momentum is down. Again, I don't consider overbought, oversold in these markets. Just momentum is down, bias is down, trend is down. And on the dollar index, we're finishing off the week. Looks like we're going to be up. It's not quite finished yet, but it's up 18 as we're talking. Momentum feebly trying to go up. It's doing it. If you look at this, and I did, here's the low of 88.15, and you go to this low, and it's 88.25.5. You always have to actually look. Visually, my eye is telling me I got higher lows. That's not the fact. the market's got, if anything, a lower low, a higher high. We've had an attempt at a bear market rally, no rally at all, basically, to try to get back to the 18-week moving average of closes. We have bias down, no trend in the swing line, and momentum trying to go up. I don't know what to do with that, but I know what to do this weekend. And I'm going to write my research report, and I'm going to do a gold report. And I hope to have the gold report no later than Monday done and get it out to everybody. I won't release it over the weekend. That's a promise. It'll be Monday at the earliest. I waited on this because I know so many of you want to talk the metals. However, between the tariffs, Gary Cohn, North Korea, inflation numbers that are lacking in wages, there's a lot to digest, and the chart action isn't that clean. You might want to, though, take a look at my regular research to get an idea of what we're doing. So how do you do that? Because it includes videos that you don't see here. These videos are for the general public. My trading videos are a lot more specific. Buy here, sell there, do this, do that. And I do them every morning at 8:30, set you up for the trade day if you're on my research. So how do you get an access and try it all out? Call us, 866-973-2077. You can go to our website, www.iraepstein.com. You can click up here or underneath us at any point. You can just click on many websites. It says click here for Ira's free info. I'm Ira Epstein. You all have a great weekend, and I'll see everybody come Monday.